for those who are invested or are excited about uranium, I think there is a lot to be excited about. Prices need to rise to incentivize new supply to fill that supply-demand gap.
Is there any truth to your desire to try and force some of these higher cost producers out of the market so that you can grow market share without necessarily growing the business? Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up, helps us understand which companies you think we should be spending our time, money and effort on. And also do leave your comments below. That also helps us to understand sort of questions you'd like us to be asking, how you think we're doing, and of course what you think of the company. And if you want to catch this as a podcast or read about it as an article or transcript, you can go to cruxinvestor.com. And for our Crux Club members, you get early access to this video. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We spoke earlier today to Riaz Rizvi, who's the Chief Commercial Officer for KazAtomProm, uranium producer, listed here, well, 25% of it, in London. We talk about perceptions in the marketplace, what's going on in the US, the macro supply-demand story, as you would expect, impact of COVID on production, when and how the ramp-up happens, and a bunch of other topics. Very exciting conversation, I thought. So take a look in the description below at some of the topics discussed. Anything interests you in particular, click on the number beside the topic. That's called a timestamp, and that'll jump you to that part of the video. Otherwise, enjoy everything that Riaz has to say. Riaz, how are you doing, sir?
Very well, good to see you.
Yeah, well, thanks for joining us. Fantastic. First time on the show. Everyone's excited. And obviously a lot going on at the moment. But I always ask people to kind of kick off, give us a sort of 1 minute overview of the business.
Well, KazAtomProm is the national operator for Kazakhstan in the nuclear sector. So we occupy the whole front end of the fuel cycle. We're the largest producer in the world. We have the largest reserves in the world. And just to put that in perspective, Kazakhstan produces 40% of world primary uranium production. KazAtomProm is about 24%, and then the rest is attributable to our joint venture partners. We are also one of the lowest in terms of our environmental footprint because of the way that we mine. All of our deposits are ISR amenable, which we'll come on to, I'm sure, in a few minutes. But it means that we have the smallest environmental footprint relative to our production size. We have been public since end of 2018. We IPO'd on the London Stock Exchange and on the Astana Exchange. As far as the company is concerned, being the lowest cost producer, we pretty much occupy the bottom tier of the cost curve. It makes us very resilient, very financially sound, low debt leverage ratios. And I would say, it seems maybe somewhat contradictory, but having been the largest producer in the world since 2012, we're now also the largest seller of uranium in the world. So it's a combination that you don't often see, I would say, in commodities, to have all of those factors: largest, lowest cost, least environmental footprint, with the biggest reserves and the largest sales. But it's a fairly unique business from that perspective.
Well, it is. It is a very unique business. Because you come from a culture of, a business model and a culture of being a state-owned enterprise, where typically, and I've worked on the oil side of this equation, is where the focus is on production, not commerciality. So with the listing 2 years ago, you're having to, I guess, change things. So, what is the difference between pre-2018 versus post-2018?
Yeah, it's night and day, really. When you go back to the inception of KazAtomProm back in 1997, the country produced less than 1,000 tons of uranium, so it was not even a player in the market, and put a very strong emphasis on growth. And I think a lot of mining companies do assume that the more you produce, the more money you make because you're driving down your costs. And that was really the mindset up until 2016. But we saw over that period a huge destruction in value in terms of a collapse in the uranium price from a peak of about $138 in 2007. Certainly post Fukushima, a lot of demand came out of the market, and uranium prices collapsed to around $18 in 2016. So it became clear to everyone that we needed to rethink our business model. And early 2017, which is when I got involved with KazAtomProm, we started looking at this value over volume model. It's not rocket science. It's something that a lot of companies have adopted. But I think we were fairly uniquely placed. One, because of the significant size that we occupy within the market space. Really taking a leadership role and emphasizing the responsibility that we have to look at the market and produce in relation to the market, rather than chasing this objective of growth for its own sake. But also the unique ability that we have with our in-situ recovery mining to basically flex up and flex down our production without it actually impacting on our unit cost of production is a very important factor and really drives our strategy now, which is much more market-centric. So from that perspective, we design our medium and long-term production and sales plans based on our fundamental view of the market, which means that in 2017, for the first time, KazAtomProm announced that it was cutting production, and then we extended essentially a reduction in our planned production for the period of 2018 to 2020, and most recently we've extended that to 2021. And that's made a big difference. I mean, we were not the only ones to cut within the uranium space. We obviously saw Cameco, Orano, the Russians, Rosatom, all also either taking assets offline. We saw Paladin disappear and a number of other smaller companies basically go into care and maintenance. So there's been a rationalization of the industry, which really kicked off in 2017. And I think it's really gone a long way to bringing the market back into balance. Apart from that, there's a lot of other things that we did internally, which I'm happy to talk about. But,
I do want to talk about those, Riaz. Let me, if I may, because there's a few things you touched upon there. The thing I want to start with before we get into assets and contracts and everything else that is exciting the market at the moment is perception. Okay, so they brought you in 2017. You're an ex-trader with Constellation, I think. You've worked in finance. You've also got Russell Banham and Neil Longfellow in there on the board to show some degree of independence, not independence, maybe that's the wrong word, some sort of unbiased governance, I think, right? Which, coming back to the state-owned component, there's a very adversarial language used by North American companies when they're talking about KazAtomProm and Russia, okay? And we saw that in the Section 232 petition, some of that language. And, do you think that is weighing heavily on the mind of the board? Do you think it affects decision-making, or do you have to just get on with business?
Well, I would start even earlier than the IPO in looking at what KazAtomProm has been doing. Our former chairman of the board, John Dudas, who's an ex-BHP metals and mining executive, he came on board, I think, about 3 years before our IPO. So I think very early on there was a realization that trying to bring about a governance structure and an independence was very important. And in fact, if we go back to the creation of Samrup Kazina, which is the sovereign wealth fund of Kazakhstan, all the major national companies are all housed under this umbrella of Samruk Kazina. So, the National Oil Company, Telecoms, Postal Service, Rail, and KazAtomProm. So they were our 100% shareholder. And the mandate for Samruk was very simple, which is to create long-term sustainable value. So there was already a degree of separation between our company, KazAtomProm, and the government. And that was very deliberate. And the second part of that kind of long-term government thinking was trying to get as close to OECD standards as possible in pretty much everything that it does, from economy, healthcare, education. So a big part of that was reducing the role of government in the economy, and the privatization really came from that. So KazAtomProm was the first company to IPO within the Samruk portfolio, and obviously Samruk have very ambitious plans to privatize many of the other companies within the portfolio. And it's a very deliberate government policy to reduce its role. So now, essentially, Samruk has gone from being 100% shareholder to being 75% shareholder. And really the governance structure very much predated even the discussions around the IPO, which is atypical. Very often when you're getting a government company ready for IPO, suddenly you've got a renter board that pops out of nowhere. But the guys on our board, the independent non-executive directors, are all industry guys. They have really strong track records in our sector, or in governance around accounting and finance and so on. And they've brought a huge amount. So I would say there's a clear distinction, and I think it's evident in the relationship that we have with our other investors, that really we cannot give priority to our major shareholder, and our investors are very comfortable with that. In terms of the role and the relationship with Russia, look, I think Rosatom is a partner of ours, a JV partner of ours. If you look at our production, we have 13 mining companies. 3 are 100% owned subsidiaries. The other 10 are joint ventures. So we have a joint venture with the Canadians, with Cameco, with the French, Orano. We have 2 joint ventures with Japanese consortium, which include a number of utilities, one led by Sumitomo, the other one by Marubeni. We have a joint venture with the Chinese, CGN. So Rosatom is clearly an important joint venture partner for us. But we have a strategy which is very focused on KazAtomProm and Kazakhstan's interests, and looking at the supply-demand picture in the market. And I think the scaremongering that some people have been trying to associate Kazakhstan or put it within the sphere of influence of Russia, I think it's kind of a naive approach.
Yeah, I mean, and there has been a lot of that narrative in the market, because it's also goes to the same conversations go to your controlling price in the market, trying to put people out of business. But I'm reading your literature, and it says you're a commercial enterprise now. You're not a state-owned operation, although you are partially listed. I mean, again, is it the same answer? It's a sort of naive outlook to think that you would want to operate at suboptimal levels?
Yeah, I think that the industry hasn't done itself any kindness by ignoring market fundamentals, and we've all paid the price of it. And it really talks to the sustainability of the industry overall, that we would have allowed prices to fall to levels where even the largest and lowest cost producer is struggling to cover their costs. And if you look at the demand growth that we're seeing in the market over the next 10 years, it is absolutely critical not only that some of the mothballed production come back into the market to fill that gap between supply and demand, but also that new production come online. And right now, the price signals, unfortunately, aren't there to incentivize that new build, or even really bringing back very quality tier one assets to the market. So the risk is that, and we've seen it in many other commodities, in electricity and coal and iron ore, that everybody knows that we need material in the future, but the price today doesn't incentivize the investment that's required to get us there.
Okay, and then I just want to keep on this theme, because there's a few conversations going on out there, and I just want to either knock them on the head or at least add some new data to those. So, is there any truth to your desire to try and force some of these higher cost producers out of the market so that you can maintain and grow, or even grow market share without necessarily growing the business?
No, I mean, if you look at everything that we've done over the last 3 to 4 years, it's very apparent we are cutting production. We're reducing the amount that's going into the market, trying to bring the market, into balance. And we believe that a healthy uranium market is really the right answer, not just in terms of giving utilities a choice and a diversified portfolio of supply, which we think is really the right strategy for any utility that's looking for security supply. We don't want to be 100% of anybody's portfolio, but also it's important that the nuclear industry know that the uranium will be there for them as they make these very large capital investments into new nuclear power plants, and putting that at risk, it really jeopardizes the industry. So it's absolutely not in our interest.
Good. Okay, and just I think final one in terms of this area. I think Mr. Primatov has stated that they want to grow their US production. They went in terms of supply.
Market share.
Sorry, correct. Market share. Currently at about 8%. Do you think this sort of anti-Eastern European, Russian, Kazakh rhetoric will affect your ability to do that?
I don't think so at all. It's very interesting. I'm sure many of your viewers are aware of the 232 investigation, which two petitioners basically launched, and the Department of Commerce presented a view on. We consulted with a lot of US utilities at the time, and it was really very positive to see how supportive the US utilities were of KazAtomProm and of Kazakhstan. I mean, Kazakhstan is a very strong ally of Western Europe and the US. There's a huge amount of foreign direct investment, over $40 billion, just Chevron's investments in Kazakhstan in oil, as I'm sure you know. In terms of where Kazakhstan's economy is most closely tied, it's I would say it's very well balanced between all of its neighbors. I think the actions of the utilities, who are our customers, probably speak volume in terms of just don't believe the hype of a couple of
I feel a song coming on. Don't believe the hype. So, and you mentioned a few of your joint venture partners there, and you've also said you need to, keep developing mines, and I do want to get onto production in a second here. So you have a number of joint venture partners. Was that a function of needing to buy in the skills? And if you were to develop new mines going forward, would you need those partners anymore?
Yeah, no, that's a good question. The short answer is those joint ventures were really created in the early days of KazAtomProm, when there was a huge amount of infrastructure and not much access to capital. It was a new country. It had no experience in terms of marketing to the West. So our joint venture partners brought a number of skills, not necessarily in mining, which I think is most people's assumption, because in fact, our expertise in situ recovery mining has really been there from the start, and we're still very much the world leaders there. But in terms of access to markets, in terms of access to technologies, I mean, the Canadians brought us access to conversion IP. So, we have the ability to build our own conversion facility in Kazakhstan should the markets need that. With the Russians, it was access to SWU capacity, the enrichment capacity, all of which were essentially leading towards having a position within the whole front end of the fuel cycle: mining, conversion, enrichment, and then fabricating the fuel that goes into a nuclear power plant, which is essentially a joint venture between ourselves and our Chinese partners that should be coming online shortly.
So you're 100% in Kazakhstan. There's a very difficult environment. You're ISR specialists. That's your focus. But there's a lot of talk in the marketplace about the timing of when long-term contracts will start to be signed again. And that is being put out. And again, we'll get onto utilities and long-term contracts in a second. But
sure.
Is there any part of your business plan which involves M&A activity outside of Kazakhstan?
It's very difficult to justify investing anywhere else. I mean, we have priority access to all uranium deposits in Kazakhstan. So what that means is, and it's very different to, some of the other commodities that you deal with. When the price runs up, suddenly you see 500 juniors pop up on the TSX and the ASX, all of whom claim to have the next big deposit. No foreign company can come and start exploring for uranium or producing uranium in Kazakhstan. That's embedded in the legislation, and going forward, we cannot sell down our holdings in those joint ventures below 51%. So in all future joint ventures, we will be the majority shareholder. But I think the drivers that brought those partners into Kazakhstan, for them, was very obvious. It's access to the best resources in the world. For us at the time, it was very logical. But if you look at the amount of cash that we generate relative to the cost of bringing new deposits online, it's absolutely the case that we don't need joint venture partners anymore. So were we to bring partners in, it would be for a much more strategic reason, if at all.
Okay, and recent announcements, you've given guidance to the market that you're going to be able to deliver against contracts for 2020. Even yourself the option of maybe dipping into the market if you need to, depending on how long COVID lockdown restricts your production capabilities.
Yeah.
So, and in the same breath, you talk about continuing to issue dividends.
Yep.
So how does that work? Why is that not affected?
Well, you've got to basically separate production from sales. That's the first thing. We have the lowest cost production, and we've seen markets, really respond to the change in supply and demand dynamics in the short term. Uranium prices have gone from $25 pre-COVID to $33 today. So in terms of revenues, our sales haven't changed. We still expect, and in fact, most of what we are selling in 2020 was already committed, before we really started to see COVID impact production. Our inventory levels, which were a little bit higher than we wanted or that we aim for, give us something of a buffer. But virtually all of our sales are tied to the uranium spot price. So from that perspective, even if we do have to buy in the market to cover some of our sales, our contracts will never really be out of the money, so to speak. So we feel very good that even having reduced our production levels this year, we'll be able to meet our sales targets, and our revenues, are certainly going to be helped by a higher uranium price. So it allows us to pay out dividends going forward, and we're very comfortable about that.
Okay, and I'm just trying to understand the logic and the mentality of it, because obviously you've got contracts, you've got some production, but it's been affected by this. We're up to 4 months now of this lockdown period. You're eating into inventory off the balance sheet. I think the market would forgive you if you didn't pay dividends, but does this come back to this perception issue that you're having to work just that little bit harder?
No, it's it's a business with cash costs of $11 to $12, selling uranium at $33. Our all-in costs are somewhere in the region of $13.5 to $14. So it's a very cash generative business, and as a result, we have a very clear dividend policy in place, which is essentially that we pay out 75% of free cash flows. As long as our net debt to adjusted EBITDA, attributable EBITDA, stays below 1 times. And we're well below that. As I mentioned, we're fairly unlevered business. So we can afford to pay out cash. And frankly, there's nothing else really that we see generating the same types of returns for our investors as our uranium mining business. So when the time's right, we will be reinvesting into new deposits, but the market isn't telling us to do that right now.
Okay, can we talk about how lagging between production versus wellhead development? Because obviously COVID has impacted activities in country as it should do. You're doing all the right things for all the right reasons, but what is the lag there, and when's the next review point where you kind of come back to market and say, well, actually, we're going to have to reassess things?
Yeah, I guess there are 2 parts to your question. Reassess in terms of whether we need to go back into the market and buy material. I think we're getting close to that point. Reassess in terms of what we do in relation to social distancing and in protecting our employees and their welfare, which is obviously our top priority. It's a top priority, I think, of any mining company. That is an ongoing dialogue with the government, the local health authorities, as well as reviewing whether the preconditions are met to be able to start bringing people back on site. We took a view a week ago that just wasn't the case, and we'll continue to reevaluate as the situation unfolds. It's very, very difficult. Kazakhstan moved so early, and they were so successful at closing down the growth of this pandemic in country. And then, as all countries are grappling with this question, they started to relax measures, and then we started to see a fairly significant increase in the number of cases, which has forced the government to basically reimpose some restrictions, and we've got to basically measure what we do relative to what's happening in the country and in the communities around our mines. Okay,
but as the longer this goes on, you run out of options. So you were able to, in the last set of guidance, maintain guidance, which is good. But like I say, you had given yourself the option of going into market. But what's the next point? What's the next date that we should be looking for in terms of the next guidance issuance from you?
It's very difficult for us to say. I mean, take a step back. You asked about the time lag. We're not going to see really any material deviation in our production volumes for the first half. Okay. In spite of the fact that we said that mid-April we were imposing social distancing, force majeure was declared at all the mine sites, because there is at least a 3 to 4 month lag between when you're doing something on site and when the uranium is being produced. It means that the steps that we took in April are only really going to affect the second half of the year. The longer that we continue to have to maintain the social distancing and we can't resume the drilling and the injection that's required, it may not necessarily impact on this year's production, but we might start to see an impact on next year. But we're not guiding to 2021 yet.
Okay, because your inventory levels that I've read are about 6 months. Is that about right?
Going into this year, they were around 8 months, and
Right.
our target is 6 to 7 months. And we do need to stay at around those levels in order to operate properly.
Okay, and then so what you're saying in terms of when you will be able to again inform the market about what the impact has been, it may roll over into next year. You're a calendar year, are you?
Yes.
Right. Okay. Interesting. Let's talk about utilities then. Okay. Because the great mystery that is utilities. Now we've had a few conversations. We're involved with the AusIMM conference last week. Chaired a panel. Fantastic speakers and so forth. But the general mood seems positive because the macro story is positive. Obviously, the current situation we find ourselves in with COVID and the reduced supply around the world is, as I said earlier, getting uranium bulls quite excited. But everyone's waiting for utilities to do something, and the feeling is that they can't do anything until two things happen, and that's one. We get a sense of what's happening with COVID, because they've got their own issues, and two, the US elections. Do you agree with those as the reasons, or do you think there's more to it than that? Why aren't they making decisions now about long-term contracts?
Well, taking a step back and looking at how the market's been over the last 6 to 7 years, it's really paid utilities to defer their buying decisions because the market has just continually fallen since 2012. So I think that's the basic mindset. And that mindset's been helped by the fact that in an oversupplied spot market, they've been able to defer long-term negotiations by buying 1 to 3 years out. And that's a pattern that we've really seen with financial intermediaries buying in the spot market and offering 1 to 3 year RFPs. We haven't seen a huge amount of contracting longer term. But at the same time, and everybody recognizes this in the market, you look out to the end of the 2020s and you've got this gaping deficit between demand and supply. So we all recognize that new production needs to come into the market, and the price signals aren't there. So for those who are invested or are excited about uranium, I think there is a lot to be excited about, because we do see that prices need to rise to incentivize new supply to fill that supply-demand gap. And uranium is a non-substitutable good. You can't put anything else into a power station. And price elasticity of demand is virtually zero, because even when uranium prices go up, there's such a small part of the cost of a megawatt hour. And in most jurisdictions, the nuclear generator is the base load, lowest cost producer of electricity. That essentially utilities are more focused on security of supply and less focused on absolute price. Now, having said that, the last few years, there's been no issues around security of supply, because you could always pick up material in the spot market. What COVID's done, I think, is whilst the market went into balance in 2018, the loss in production that we've seen this year, not just ourselves, but in pretty much all major jurisdictions, means that there is much less material in the spot market. So why aren't utilities doing something about that? Frankly, I've been on the other side of that table as a utility trader looking at fuel procurement. And, the short answer is they've got much more important things and much tougher things to deal with right now than their nuclear fuel procurement. And I think The decision making is really around today dealing with COVID, dealing with the other parts of the front end of the fuel cycle. There are a lot of questions around enrichment and conversion, and yes, they will get to uranium. Previously, I would have said, that's a discussion for next year or maybe the year after. But I think those discussions will happen sooner than later.
So when are you going to get back into contracting?
Well, we're always contracting.
But there's one. I'm kind of what I want to talk about is price. Okay, so the price had a little bit of a bump recently, settled back down, but it hasn't really moved the needle for a lot of people. I get that you're the lowest quartile producer, and that's great for you. You can still make money, but there's got to be an optimum price at which you want to contract. You want to drive the price higher, don't you?
I don't want to drive the price higher. That's not our objective. But I recognize that the price does need to go higher for supply and demand to balance out this decade and beyond. In terms of a target price, we never give one. We can't. But I think we are still a ways off a long-term sustainable price, and that price is well below a new build incentive price, because you got to think of the billions of capex that need to go into a new mine, the 10-year lead time to bring new production into the market, and a return on that capex with, by definition, probably any new projects coming on not having the same economics that we're seeing from the tier 1 projects that we run and that some of our partners run as well. So long term, I think you're right to be bullish about uranium. Short term, there are still factors in the market which mean that buyers are not focused on buying uranium right now. And this big run up that we've seen has really been driven by producers replacing pounds that they're not producing this year from their own mines, due largely to closing mines for economic reasons and COVID. So we haven't seen any utilities, we haven't seen any financial players in the market this year, which is a real difference from, let's say, some of the run-ups that we've seen in the previous few years, which have been more trader and speculation driven rather than fundamentally driven.
And thank you for that. I appreciate you. There's places you can't go, which is fair enough. But what do you think that's going to do to the marketplace? Because there's a lot of companies, and I don't necessarily want you to talk about companies here, but just generically, there's a lot of companies that need prices in the 50s and the 60s to get back into commercial production. And that is where they want the market to go. But between now and then, there's a long, long road ahead. Do you think that the return to these sorts of higher prices are imminent, or do you think we're looking towards the middle of next year before we'll allow the market to actually find its own feet? Because it seems like it's being held back at the moment by several factors, which again we can go into later.
Right. I think when we see utilities and producers sitting down is a tough question to answer, because I do genuinely think that a lot of it is tied up around utilities really struggling to deal with their issues in the rest of their portfolio. I mean, nuclear is phenomenally resilient. You reload once every 12 to 18 months, and then you just kind of close the gate and run the plant base load. But a lot of our customers have coal in their portfolio, they have gas in their portfolio, so they're struggling with a whole bunch of issues. Nuclear fuel isn't necessarily one of them. But at the same time, I think when utilities start to go out for those 1 to 3 year RFPs, depending on how much material is available in the spot market that is offered to them in the form of a carry, if those pounds aren't there, I think that's the point at which utilities and producers need to sit down and say, all right, we as producers, in order to ensure the next 5 or 10 years, we need a price level that allows us to make those investments. We're not going to lock in a 10-year loss. And therefore, if you need material in the next few years and beyond, let's start to have the conversation about where we can make a fair return on our assets.
Okay, given that you want to get more of the market share in the US, do you see the actions of the current administration and the potential next administration in regard to their involvement with the nuclear fuel working group having any immediate effect? Because they seem to have made it into a very big puzzle that they're trying to solve, which is the whole nuclear fuel cycle. What's that going to do for US uranium producers or wannabe producers?
Well, keep in mind that so KazAtomProm produces about 24% of global primary production. Only less than 10% of what we produce goes to the US. So it's a very small part of our portfolio, but the US is by far the largest buyer in the world. I mean, they're buying 50 million pounds a year. So it makes sense for us to want to grow our market share in the US and in Europe, really to diversify our portfolio. But whether I think that there are policies that are going to make it more difficult for us to do that, first of all, no, I don't really think that's the case. I don't think KazAtomProm is being targeted, and Kazakhstan is recognized by our customers as a key component within their security of supply strategies. The working group has made some recommendations which would see funds go towards supporting production of domestic US uranium, which will then be used as a strategic stockpile. So that production doesn't impact on global supply and demand. And I think that was an excellent decision, because the last thing we need is market forces that distort prices and slow down the recovery of the industry, which a quota or tariff or subsidies to US miners for material that gets sold to utilities would have brought surplus material into the market, and that's absolutely not what the market needs. So I think the decision was the right one. I think further decisions will continue to be very mindful of the fact that US utilities produce 20% of US electricity through nuclear, and it's one of the only countries really in the world where nuclear does struggle in certain markets with very low gas prices, but it is, the most reliable baseload source of clean energy.
Okay, so I did want to ask you about Mr. Permatov's quote. Said, current prices are not sustainable. We're looking at the market from a long-term prospect, and it is in our interest that the changes will be sustainable and not for the short term. So I think there is a desire by any commercial entity to see prices go up. And I appreciate you can't give me a number, but that's fine. But because we're running out of time, so I know you've got a hard stop. But so the last question, if I may, with regards to resumption of production, that's not as easy as it sounds. You're not just turning a tap on. You've got plus 20,000 people who are dispersed currently, not where they need to be. And then you've got, from a technical perspective, ISR fields and just the way that they operate. What is the process for getting back to normality in terms of production as you were targeting it?
Well, this is unprecedented in our history, that we would take essentially all well field development offline for this period of time. So the short answer is we don't know what the final impact will be on our production. It's very difficult for us to gauge how quickly we can ramp up. I can certainly say it's not a binary outcome. If we start to bring people back onto site, it'll be slowly and cautiously, and it'll be really a function of what's happening in terms of this pandemic. So I don't see us, at the end of 4 months suddenly fully staffed and back to trying to achieve full production. It's just not realistic. So it's going to take longer, and it's going to be more staged, I suspect, than if we were operating a single conventional underground mine, where as soon as you hit go, you start to produce. And then, of course, the time lag between when we start to re-drill, re-inject, and those deposits start to produce is anywhere 3 months plus.
It's very challenging with an organisation of that size. That it's like military precision required to get everyone back to where they need to be. But technically, are there the longer this goes on, does it get harder to get back into those fields and be producing?
Yeah, I would say nuclear precision rather than military precision.
Probably a better phrase. I stand corrected.
Yeah, it does. It certainly does get harder the longer we're not operating, because we're moving into winter, and for anybody who's been to Kazakhstan, we're going to see minus 40 degrees, and at those sorts of temperatures, we cannot continue to inject the low pH solution that will be producing uranium in the spring. So we can continue to drill, but at a certain point, we actually run up against essentially a hard stop on the preparatory work that's necessary for next year's production.
Beautiful. And talking hard stops, I'm informed by your very talented PR team that you have one now. So I will say thank you very much. We're absolutely, delighted that you've come on the show and be able to talk to our listeners and viewers. Appreciate your candor as well. You've got a tough road ahead, as you say. Nuclear precision needed to deliver. We look forward to hearing how you get on. Thanks, Riaz.
No, it's been a pleasure. Thanks for having me on the show.